Hello and welcome. You are watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, a brilliant session is what we witnessed as of yesterday. The markets extended their rally of Tuesday's recovery on Wednesday as well, gaining over 1%. This was bolstered by positive global cues and, of course, the significant developments in the U.S. elections, where Donald Trump has yet again become the U.S. president. He will be taking office as the 47th U.S. president, and that has lifted the spirits across the globe as well. In fact, yesterday we did see the BSE listed companies gained about 8 lakh crore rupees in market cap with that bounce that came in. All the sectoral indices were up in the green, but the one that was the most noteworthy of them all was the Nifty IT index that rallied well over 4% in trade, followed by strong gains even in the realty and the oil and gas sector as well. So those were the key sectors that rallied and how, and that lifted the sentiments all across the board as well. Now, of course, we will also have positive handover to react to as far as Wall Street is concerned, which is at record high levels. Remains to be seen whether we will be carrying on the trade that we did see yesterday, or will we see some profits being taken off as well. Good morning to all of viewers and good morning, Shail.
On the weekly expiry of the Nifty today on Thursday. It's, I won't mince words, it's not looking good for us. Sakshi, before I begin my conversation, would you want to mention the FI net sales number? I remember I told you it will be a net sale despite the stunning rocketing prices that we had.
Absolutely,
why don't you
Shail,
give that number
right,
and then I'll start the
because
conversation.
you did say that, the number will be far exceeding the one that we saw yesterday, which was around 2,500 odd.
Yes.
And the number is nearly double of that. 4,445 odd crore rupees have been sold off by the FIs, which you clearly had pointed out, because this bounce would give them an apt exit point after the rally yesterday.
Okay, ladies and gentlemen, now please keep this number 4445 in front of you. What is happening, ladies and gentlemen, is that till November 5th, we were under the presumption that Indian markets are falling because of volatility and, of course, a bit of overvaluation domestically. Volatility because of the US elections. But it is now clear that our losses or our profit booking that is happening in Indian markets, despite equal or better or higher buying from DIIs, is because of overvaluation. And our foreign friends are using every opportunity that they have to sell higher or lower. And our SIPs, our systematic investment plans that have been invested into domestic equities via mutual funds, are helping that exit in a very orderly manner, if I may say so. Yesterday's DII buying was more than FII buying, but the painful part continues, and now it's more or less clear that you will again have this trend of sustained FII selling in November as well. Remember, October they had sold somewhere like 1,10,000 crore rupees. The first 5 days of November have been equally negative, but let us see how it goes. I'll also request the PCR to now show the US 10-year yield. We were hoping against hope that US 10-year yield would subside after the stunning victory of Mr. Donald Trump, who's now the 47th President of the United States. One fear was that if the election is equally matched, then there might be a problem in terms of accepting defeat or pinning victory. But it's very clear that the US 10-year yield continues to rise, and now it is at its highest level since July 1st. It is somewhere like 4.426. Added to it is the strength of the dollar index. Yesterday's bar was phenomenal. The index itself rose 1.61%, and at 105 it has appreciated dramatically from a low of 100 at September 30th. So a strong dollar index, a rising US yield, plus all signs of absolutely no rebate in second quarter earnings, ladies and gentlemen, is a cocktail for further sales. Now look at the chart of the Nifty. It has now facing resistance again at the 21-day exponential moving average, as also the most strongest call writer at 24,500. The gift Nifty is pointing out to probable downtick in early trade. Let us see whether that's bought or not, but again remember the low 23,808. If that is broken, then again the selling pressure will start. So this is the view on the market. I don't think so we are still out of the woods, plus the fact that it's the weekly expiry of the Nifty today. You have the 2-day US Federal Reserve meeting, whose decision will be known tonight on Wall Street. Most likely a 25 basis point rate cut is again coming, and of course we will be reacting to it tomorrow morning. As earnings are concerned, on the Nifty we have two major ones, Trent as also Mahindra and Mahindra. We have 7 earnings coming in from the F&O space. The major ones are Indian Hotels, Escorts, Cummins, and of course Steel Authority. The best set of earnings has come in from Tata Steel. The company has swung from a loss to a very good profit in the second quarter. It is 759 crore rupees in the quarter gone by, versus a loss of 6,511 crores in the year ago quarter. As far as Tata Steel is concerned, that number is good. More details will be given by Sakshi. And of course, the same story remains. If you are looking to re-enter Indian markets, look at the SBI Nifty ETF, and traders need to be very, very cautious on the long side. 24,500 put for the expiry of November 14th will be in heavy demand today on the long side. Sakshi.
Right, so let's start off with the cues on the Wall Street. All the 3 benchmark indices ended at all-time high levels after Trump's victory. We've seen Dow Jones surge about 1,500 points in trade, or 3.5% higher, to close at the 44,000 mark. This was the best single-day gain for the Dow Jones since November of 2022. That's almost a year as well. Now, the S&P 500 also saw its best post-election trading session on record. It jumped about 2.5% to close near the levels of 6,000. Now, we did see the S&P 500 notching its 48th record high for 2024 as well. The Nasdaq Composite also surged by about 3% in trade, led by a 15% jump in shares of Tesla to close near the mark of 19,000 as well. So the Wall Street was in finest shape in the overnight trading session. Following this, we've seen some of the stock market indices in the Asian markets inch up high, like the Chinese, the Hang Seng, that's managed to pull up as well. But it's a mixed trade because the Nikkei is down by about 0.4% and the Kospi is also slightly lower in trade. Right now, it's been very, very volatile in the early morning action for even the Asian markets. The Gift Nifty is now turning absolutely flat, indicative of an opening at 24,490 odd levels for the benchmark Nifty index as well. Now, let's look at some of the key highlights that Shail has also pointed out. Remember, the US dollar index will be a key monitorable, now at 105.08. US 10-year bond yield is at 4.44%. Brent crude slipped by about 0.8%. It is now at $74.92 a barrel. Bitcoin, after that rally and record high move coming in, $75,242 is where it ended at. After the day's move, ended just about 1% lower. Gold spot was up by about just 0.1% at $2,663 an ounce as well. As pointed out earlier, the overseas investors, the FPIs, have remained sellers for the 28th consecutive session in the Indian equity markets. They've pulled out stocks worth 4,445 odd crores. The DIIs, however, mopped up stocks worth about 4,889 odd crore rupees, so making up more than what has been lost on the FII account as of yesterday as well. Let's look at the key stocks then, which we need to keep an eye out on. Tata Steel reported a strong turnaround in its Q2 consolidated results with a profit of 758 crores compared to a loss of 6,500 crores in the same period last year. Revenue, however, declined by about 3.2%. What we've also seen is that on a positive note, EBITDA jumped by 43.9% to 6,141 crores. And what we've also seen is that the company's margin expanded by 370 basis points to 11.4% from 7.7% in the previous year. Apollo Hospitals came out with its numbers, reported its Q2 net profit of 380 crores, up from 233 crores a year ago. Revenue of 5,590 crores was also seen here, up from 4,850 odd crore rupees, again year-on-year number. EBITDA margin came in at 14.5% compared to 12.95% on a year-on-year basis as well. Good set of earnings on that one. Kansai Nerolac also came out with its numbers. Net profit of 130 crores. This was down from 180 crores in a year ago period. Revenue stood at 1,860 crores. That was slightly up from 1,845 crore rupees reported in the year ago same quarter. EBITDA declined to 215 crores compared to 270 odd crore rupees. So mixed set of numbers coming in on Kansai Nerolac. What we've also seen is that Power Grid came out with its numbers, reported its Q2 numbers, a profit of 3,700 crores compared to 3,800 crores in the year ago period, slightly lower. Revenue stood at 10,260 crores, again down from 10,400 crores, slightly down on a year-on-year basis. Margins came in at 85.6% compared to 88.37% on a year-on-year basis, and the company also declared an interim dividend of 4.5 rupees per equity share. Blue Star reported its Q2 numbers, the net profit of 96.2 crores, up from 70.7 crores on a year-on-year basis, but this was down from 170 crores on a sequential basis. Revenue stood at 2,280 odd crore rupees. That was up from 1,890 odd crore rupees on a year ago period, so this was a strong number. EBITDA margins came in at 6.5% versus 6.5%, so steady margins on that front as well. Jindal Steel and Power. Q2 net profit of 860 crores was down from 1,390 crores, so decline over there. Even the revenue declined to 11,200 crores from 12,250 crores in the year ago period. EBITDA and EBITDA margins, however, we've seen some improvement with the margins coming in at 19.6% versus 18.6% earlier as well. But a whole host of other stocks will also be in focus. Remember, MSCI's stocks will be in focus. BSE will be included in the MSCI Global Standard Index effective today as part of the index provider's latest rejig. Along with BSE, four other stocks, Voltas, Alchem Laboratories, Oberoi Realty, Kalyan Jewelers will also be joining in on the MSCI Global Standard Index. Apart from this, let's also look at a few other stocks like Vari Energies will be in focus. The company had received an order for supply of solar PV modules up to 180 megawatt, and also Shakti Pumps will be in focus. It's received a work order worth 116 crores from Haryana Renewable Energy Development. We will also keep an eye out on RVNL. The company's consortium has emerged as the lowest bidder for 1,917 odd crore rupees order, and it's also received another 180 crores order from East Central Railways for feeder line modification work. So these are some of the stocks that I'm keeping an eye out on, Shail.
Ladies and gentlemen, with us is Mr. Avinash Gorakshakar, Head of Research at Profit Mart Securities. Namaste Avinash ji, a very warm welcome to you, sir. This bounce that we saw over the last 2 odd days, is this something that you are hopeful will continue on the large street, or is this something that will again be sold into not only by our foreign friends but a lot of ultra HNIs, a lot of profit seekers on the option side? What is your view on sentiment on the large street, sir?
Good morning, Shail. See, I think yesterday was a day when markets were very elated because of the Trump victory. And I think today we might see a little bit of profit booking. See, you must understand that Donald Trump is well known for his tweets. And, the market do not move up in one direction on a regular basis. There will be a lot of volatility. Of course, now there have been a lot of reports that sectors like IT, pharma, or for that reason, electronic exports, these are going to be pockets of opportunities once more clarity comes in. But I think one thing is very clear that India enjoys a very strong relationship with Donald Trump. And I think that is definitely going to be positive in the longer term. But yes, in the short to medium term, volatility will be very high. In fact, one can definitely expect more volatility in the coming few weeks. Depending on what global policies Donald Trump shares. But I think one positive part is that China will be a kind of a negative point, and that indirectly will obviously benefit India. In fact, India stands to benefit, at least on that side. Lots of opportunities in the defense and space side. We have Mr. Modi also tweeting that possibly areas like defense, space, energy could be pockets of opportunity where both the countries could work together. So I think coming back to the market sentiment, Shale, I think earnings numbers, which Sakshi was mentioning, numbers this time have been slightly disappointing. So I think, markets are worried about valuations, earnings expectations not coming out, plus a lot of money, FI money going to China, which will continue at least for the next 2 to 3 months. So I think, today might be a tepid session compared to yesterday after a big bounce. So today, I think one could see a little bit of profit booking, and I think that is anticipated because I think most of the news is out. I think the markets would now look at realistic, quarter to quarter numbers of companies, and which I think is, at least for the next 2 to 3 months, you're going to see this kind of market. I mean, if I sell out unless and until it stops, it's unfortunate, but I think they have now looking at China in a big way. So to that extent, I'm not very keen that the markets would go up today. In fact, one could see a probably a mild sell-off, not maybe in the first half, but at least in the second half today. So one needs to keep a stock specific view rather than a broader index view.
Okay. Um, Mr. Gorakshakar, very good morning to you. I wanted to understand on this point only what you're pointing out, that probably yesterday was, a bounce, which was being seen as a relief rally of sorts. But what goes next is going to be extremely important. You pointed out two sectors, IT and pharma, which were being seen as the biggest beneficiaries if Trump was to take the center stage in the US. But do you think after that 4% surge that we've seen yesterday already on the IT space, is more or less everything, all the goods priced in the IT space? Or do you think there could be much more even beyond this level as well in the IT space, and some of the stocks can still be bought into?
I think large cap stocks like Infosys, TCS, Tata Technologies, see, I think these are companies where a large part of their revenue comes from the US market. And I think gradually as Trump takes over, you're going to see a change in the commentary, the order book wins. These are all going to be data points which possibly, from the December quarter, one could get little more clarity. Yesterday was more of sentimental rise, but today, if you ask me, I think there could be a little bit of profit booking. See, I think these data points are not going to come in that quickly, but yes, the markets are hopeful that there would be a good demand push for Indian IT companies, and that could obviously lead to better volume kind of growth expansion. Margins definitely would be very crucial also. But I think bigger, larger IT companies which have got large exposure to the US markets, I think, clearly, I think you could see a little bit of consolidation happening. So, I mean, there's a lot of runway ahead. But as of now, I wouldn't suggest that anybody should rush into buy. Post the December quarter, one could see a decent number. And in fact, as far as pharma is concerned, see the pharma market also clearly is a little tricky because what kind of tariffs are imposed on Indian exports is also going to be another important data point which the industry is going to see here. I think clearly, in certain categories, some companies may get affected, some companies may benefit. But overall, I think the mood in the market is that pharma and IT are two sectors which have been beaten down and which possibly could benefit, over the next, say, 6 to 12 months.
Right. Avinash, one point of hope would be sectors those rise despite a broader bear market in the background. Let's accept it that many indices in India have corrected 20, 21%, 23% from their most recent highs, stuck somewhere in June. The Nifty itself, kissed a 10% correction. Ditto for mid caps and small caps. Are there any pockets of opportunity which you feel sensible investors can buy piecemeal? Maybe PSU banks, maybe some government railway stocks. Has defense, according to you, come back as a possible buy candidate post a very steep correction in many prices? How do you look at value buying, bottom fishing at this phase of the market?
No, I think infrastructure related stocks, specifically construction and maybe cement companies, Shell, I think look interesting because the pace of infrastructure spending by the government is continuing at a very rock solid pace. So I think, cement companies, both in the large cap as well as in the mid cap space, specifically, companies like Heidelberg Cement, or for that reason, Ramco Cement. We are quite positive on these companies because capacity growth has been not very fast. Prices have also stabilized. On the other hand, EPC companies, like KNR Constructions, typically PNC projects, these are companies which are sitting on a very large order book. So I think, there are opportunities. As far as PSU banks are concerned, I think, one has to take a contra call and wait for some time because, the general mood in the market is that banking is not doing well. There are some pressures, on the unsecured loan book. But compared to the private sector banks, the smaller banks, small finance banks, where the numbers have come out, they are in a slightly more difficult situation as far as the unsecured loan book is concerned. So I think, PSU banks like Bank of Baroda, SBI, or for that reason, even Punjab National Bank, these are good opportunities provided one has at least a 12 to 18-month time frame because, without banking sector doing well, infrastructure funding in India will not happen, and GDP growth to a large extent will depend on infrastructure spending, where the banks are going to play an important role. So I think somebody who's got a long-term view can use the contra call and get into the PSU banks. I would not be surprised that even from these levels, somebody has the time and patience, he can make a decent amount of money. But yes, I think cement, typically, even capital goods, which I think the US markets could also offer a good opportunity for Indian companies to export. So apart from the domestic upturn, in the kind of capex growth by both the private sector and the government, capital goods is also one sector where selectively one can take a call.
Okay, got that. So those are the key sectors that we'll keep an eye out on. Also, Avinash, could you also highlight within the mid and the small caps, where are you really looking at for value after this recent 10% correction that has taken place? Do you think there are some of the pockets that have started to look attractive?
Yeah, I think within the small cap space, we are looking at a lot of consumption related and housing related and real estate related ancillary sectors. I think sectors like real estate, sectors like ceramic tiles, these are companies where on ground, I think demand has been pretty healthy. And I think the opportunity for the domestic market, specifically, as far as the domestic tailwinds are concerned, are pretty solid. So, companies like Kajaria Ceramics, or for that reason, in cement building products, you've got Shankara building products. This is also an interesting bet. Most importantly, in auto ancillaries also, despite the fact that the sector has underperformed, we believe that component exports are a very large part of the industry. And I think, selective companies like, say, Sundaram Fasteners, Talboros Automotive Components, typically even a Bharat Forge, I think one can definitely look at these companies because both from the domestic and the export market, the kind of numbers which we have seen for the auto sales, my sense is that more launches are expected in the third quarter. And I think that is going to drive a lot of these auto component companies. So, within the small cap base, you need to give in some more time now. I think, unfortunately, the stocks have been beaten down. But if you give a time frame of at least 6 to 12 months, there's a lot of value, across these sectors where I think you need to give in some time and hold on. I think once the earning cycle again starts in a much better way, I think you're going to see a good amount of re-rating happen.
Avinashji, what is your peer group telling you? Personally, how much cash do you hold in your portfolio? What is your understanding of a good level where sensible investors will start? Okay, let's just say where sensible investors such as foreign institutional friends of ours will stop selling.
I think foreign institutional investors will not wait, for me or you to tell them when to stop selling Shell. But I think clearly the next 2 quarters are going to be pretty challenging because, I think the biggest problem with the Indian markets is that we still are not very cheap. I think, again, the index showed a strong bounce yesterday. And if you look at the valuation bracket, my sense is that, markets are definitely not very cheap. They're fairly moderate to expensive. So I think clearly maybe till the December quarter or maybe early January, this FI selling will continue. I think the most important positive part is that today this FI selling has been completely absorbed by domestic funds. The SIP number has been very strong, and to that extent, it really has managed to take care of the FI selling part. But overall, FI selling will not end at least till December end or maybe January. And till that time, the markets will be volatile. I think markets are waiting for possibly some sort of commentary from Donald Trump, because obviously a lot of money is flowing to China now. What the view from Donald Trump is clearly going to be important, because as far as his commentary is concerned, any change on view from the US president will obviously have an impact on future, FIF flows in the country. And I think we are definitely poised to do good in the longer term. In the short term, maybe for the next 1 or 2 quarters, there could be challenges. But I think on the macro side, only one concern which the RBI governor has said is that possibly inflation now for the coming month could be slightly elevated. Now, that is something which is not going to be liked by the market. So till that time, I think the markets are going to be in a very narrow and a very volatile kind of range. So till that time, I would not be surprised that this index figure is going to be very volatile, both on the downside and on the upside. So, what happened yesterday may not be sustained today. So I think just focus on companies, and I would suggest that this is a good time. If you get such a good correction, it's a good time to rebalance your portfolio, start building good companies, getting out of unprofitable and laggards, which I think gives every investor a chance, because every year, Shell, you must have also observed that the index typically corrects by about 8 to 10%. So I think this is something which all investors should realize, that need to have a lot of patience. They need to have a lot of conviction. Unless they build in little time now, rewards are not going to come easily. It would take a little more time.
Okay, ladies and gentlemen, we have the pre-open right in front of us. This is going to be a volatile day for many reasons. We have the weekly expiry of the Nifty, plus the fact that two major moving averages, the 21 and the 100, continue to provide resistance to the index. Okay, 112 points down, just as the gift Nifty suggested, 24,322. What is in pain? Let's look at ICICI Bank and HDFC Bank. Both of them are down 5% each. This will improve for the better. Reliance is down 1.6%, 1.1% actually, 14 rupees lower at 13.11. Infosys is down 10 rupees, 18.13. This is where the index has pain. What are the points that are pulling the Nifty up? Okay, Larsen and Toubro 35 points higher at 36.80. Remember, it's available below 200-day moving average. TCS 54 rupees higher, 41.94. ITC a rupee 80 higher. This is the defensive part of the Nifty. Hindustan Unilever 6 rupees 80 higher at 2501. A quick look at what the themes are there in the NSE 500 space. Okay, Apollo Hospitals is up 7% at 7500. This will correct for the better. You have CG Power 3% higher at 748. I want to know what Tata Steel is doing. The earnings were fantastic, and we have to see the counter. 2.8% higher, 156.95. This is how Tata Steel is moving. Metals, in fact, were one of the best movers over the last 2 days. Let's get back to FNO stocks and see if there is any positivity that's coming in. Okay, Voltas is doing pretty good. Berger Paints 1.8% higher, 535. Britannia 1.5% higher. Voltas 1.5% higher. These are the names that are coming in front of me. Now, more tech is moving up. HCL Tech 2.2% higher, 1880. Coforge 1% higher. The Nifty is improving, gentlemen, and nobody is more glad than me. Now just 10 points lower, 24,474. Let's see whether the 20 EMA is taken out. The most important call writer, the biggest bear in the market, sits at 24,500. We need to take him out. Let's hope the weekly expiry will help. Sakshi, what are you watching?
Well, yes, Shail, all of these spaces are important to watch. Let's look at BSE. I wanted to check out on that one, Bombay Stock Exchange. That stock will be included in the MSCI Global Standard Index starting today. So that is important to watch out for. We will also be watching out. So it's about 0.7% higher at 4717. We'll also look at 3-4 other stocks that are going to be joining the MSCI Global Standard Index. Voltas, for instance, let's look at how that one is reacting. Alchem Laboratories next. Oberoi Realty and Kalyan Jewelers. Voltas is up 1.5% at 1765. We also have Alchem Laboratories that's up by 1% reacting to the same. Oberoi Realty and Kalyan Jewelers are the other stocks that will be joining in. So Kalyan Jewelers is also up by about 0.7% at 705, and so also Oberoi Realty is up by about 0.7% or so as well. Let's also look at a few other stocks. I wanted to check how some of the order wins are shaping up for Wari Energies. Remember, this has been an outperformer after the recent listing has played out, and last few days have been stupendous for the stock. 3625, 0.3% lower in trade as of now. The company has got a new order for solar PV modules. Let's look at even Shakti Pumps and RVNL to see whether the order inflow impact is being seen. 116 crore order for Shakti Pumps. Yes, it's up 3.3%. For RVNL, it was the lowest bidder for 1970 odd crore rupees order. Let's look at that one as well. It's up 2% odd in trade today. And let's also look at Power Grid Corporations. I wanted to check this because the earnings came in and we did see a slight dip on the earnings front, but 0.5% of an uptick can be actually seen on this one. We in fact have Mr. Sunil Subramaniam now with us, market veteran, joining right in. Warm welcome to you, Sunilji, and thank you so much for taking the time out. Well, we've seen a stupendous move in the markets as of yesterday, and we cheered the Trump card being played across the globe. How are you really looking at the setup now? Do you think that was large part of exuberance that played out for a single day, and there will be profit booking today, or do you think Trump victory has much more for the Indian markets to be played out going forward?
I think both of your answers I will support. Yesterday was not just exuberance, I would say relief rally. What is the
Okay.
relief from? The relief from the uncertainty. Because the pollsters had predicted a dead heat. And if there was a election that was going into the litigation and stretching, markets don't like that. And I think all the nervousness before that, and the fact that there was a clear mandate, that was one relief rally, number one. Number two, I think, is that Trump is a known person, right? I'll not use the word devil, but I'm saying it's a known person. What I'm saying is, again, from market wants clarity, right? So we have his previous term to see where pre-election rhetoric will be, where post-election action will be, right? So you do some things to win elections, but you don't need to do them with the same intensity because you're in power now. Now, and then when you look at Trump, right, this is his last term. There's another election that he's going to fight, right? So he's going to try to leave a legacy. So he'll try to move as a world leader, try to solve the war situation, try. So a lot of the fear around the immigration stroke tariff part, right, which was the cause for some amount of tension, I think it will get eased now. Because look at it from a practical perspective, right? Immigration, his fears or his actions are against the low-end Mexican border crossing low-end people. All his talk was about that, and that's something he's going to try to build a wall and cover. And one second, illegal immigrants, right? He doesn't want to regularize, like Biden went ahead and gave the spouses of those who were coming legally but wives were illegal, he regularized their citizenship. Those are the kind of things he's attacking, not the H1B, which is the high end. There are those skill sets which Americans don't have, so they're not displacing American jobs. So there'll be some token action on H1B and all that, but the reality of immigration is not as feared. That's why the IT sector saw a bounce back yesterday. The second aspect on the tariff wars, and look at it from this perspective, right? America imports from Europe, from China, from India, right? How much do they import from India? 100 odd billion. How much do they import from China? 500 billion. How much do they import from Europe? Much higher. So when he puts tariffs on imports, it's across the board, right? So it's a level playing field. Yes, profitability of some of those exports from these countries will get impacted because of tariff. But then look at it this way. Trump is a businessman. He's a pragmatic person. Because American industry needs to thrive. There's also exports of defense equipment, of space-related stuff, of aeronautics. So the point is that India is also a big buyer of these things. So you will expect pragmatic approaches. With India, he will negotiate on the table saying, you're putting too much on agri-related products. But on the contrary, if you're willing to buy some of their defense thing, it will come through. So I think these fears were overdone in the run-up to the election, and the market was there in relief. So there was a big bounce back. The second, is it more sustainable, right? Now, on a day-to-day basis, it's hard to predict the market. Obviously, after yesterday's relief, there may be some profit booking, there may be something, because bear in mind that there's a Fed policy up, which is going to drive with the markets. There's also the fact that we are entering December when the hedge funds book profits to pay bonuses, right? So, there's a mix of factors on FII flows will come into the factor. But is the underlying trend positive from the Trump election? I would say yes. And why? Because three things. One, the Trump Modi relationship, the friendship, the connect, so that any issues that crop up, I think they can have a phone call and sort it out. That's a big positive of the world leaders. I think Modi is probably the one who's closest to Trump. That's number one. Number two is the fact that Trump has been very clear on the fact that inflation control has to be done. So in these aspects, there are two aspects I'd like to delineate on. The first aspect of it is coming back to the tariffs. See, on the imports, right, to the extent that American MNCs, right, are setting up their own shops in China and importing, or in India and importing, they are ultimately, if you're going to tax those, then you're going to increase the end product price for the American consumer. So he can't allow that. So I think to the extent that American companies which are selling products to the American consumer but are outsourcing a part of their production, Apple for example, they are actually taking advantage of the cost benefits. Now China specific he may want to take action. So I'll bring one small point up here. America's per capita income, per capita GDP is $75,000. China's is $12,000. So that's why they outsource from China. But India's is $2,700. So any anti-China action could lead to a shift from China to India because of cost savings. And end of the day, Trump is a businessman. He's pro-corporate America. He talked about keeping low taxes. So to that extent, right, these things could favor the whole PLI plus the China plus one scheme. So I think that's a positive in the medium term that we could get a boost from American MNCs taking the PLI scheme, shifting management from China to India as a part of this. So those tariff things could actually work slightly in India's favor. That's one aspect as far as the inflation-related tariff is concerned. And also I mentioned that on the tariff, India will be on the table buying things from America, selling things to America. So there will be a more pragmatic approach. That's one. On the inflation part, there's a second thing which is huge positive for India, which is Trump has clearly said that he's going to pump more fossil energy out. Whether it's form of shale gas, whether it's form of regular oil drilling, he is going to turn the tap on because that's the inflation which hurts the American consumer. Now, if he does that and American supply shoots up, you're going to see crude prices come down. And in the world, who's the biggest beneficiary of crude falling? It's India, stock market, India economy, India inflation, because 85% of our crude we import. So these two things I see as a sustainable positive for the Indian economies to market from the Trump victory. So medium term, I remain bullish. Base market, hard to predict. There could be profit booking volatility in the next couple of months.
Right, ladies and gentlemen, 9:11. The Nifty has settled for the better, 5 points higher. Remember, today it's also the weekly expiry. The Bank Nifty is trying to open 58 points lower. This is a fresh start for the Bank Nifty. It is a new weekly expiry for the Bank Nifty, and the IT index is up 111 points after yesterday's stunning 4 percentage point rise. So keep an eye on IT. Look at Infosys, look at TCS, look at HCL Tech. These will eventually be the biggest winners if corporate US companies start spending again back on IT. What else has improved in terms of opening quotes? Let's look at Tata Steel opening 1.6% higher, 156. Remember, the Indian EBITDA per ton was somewhere like 13,131 rupees per ton versus an expectation of 11,500. So it's a big leg up. Of course, the UK operations did not perform as well, but overall Tata Steel has swung to a huge profit from an equally huge and bigger loss in September 2023. Chambal Fertilizers 1.3% higher, Gujarat Gas 1.1% higher, Sun Pharmaceuticals, again pharma is coming back into focus. These are major exporters. About 50 to 60% of Indian pharma top line comes from the US. Look at Sun Pharma, look at Cipla, look at Divi's Laboratories. These are large cap pharma companies which are now enjoying a very strong bounce. Namaste Sunil ji, and a very warm welcome to you, sir. Any stocks that you would want added at current levels as far as prices are concerned in the long term portfolio? What looks good to you?
It's hazardous to pick stocks at this stage. Rather, I would stick to buying sectoral indices, because the earnings season hasn't been great by and large. And even Trump's speak in the run-up to the election, which stocks get affected. I think he's a very, very brave man who would go and pick single stocks at this stage. I think it's better to stick to the sectoral picks rather than stocks, Shaileji.
We'll get you in very quickly before the markets open. Any key stocks that you'd like to highlight where you have identified potential opportunities?
You're asking me?
Avinash.
Avinash, yes.
Yeah, I think, Sakshi, as I mentioned to you, we are positive on the cement sector. Our sense is that the second half for the cement sector should be quite significant. So I think we have been telling our clients to accumulate, stocks like Ramco Cement, Heidelberg Cement. We believe that there's a lot of good long-term value present here. Plus, from the capital goods space, around 3,600, even a Larsen and Toubro looks pretty good. The order book is strong. The company has a very large diversified exposure across defense, infra, capital goods. So I think here also we have been telling our clients that, possibly from a 12 to 18 month horizon, L&T also looks to be a quite interesting bet. As of now, we are avoiding the small cap and the mid cap category,
Sure.
due to high volatility. I think the large cap offers a better, decent comfort of margin of safety. And I think, capital goods, cement, building products, companies like Kajaria Ceramics, I would say that these are companies where one could, use a small SIP kind of approach and take a slightly medium to long term view. I think, portfolios obviously need to be rebalanced, but I think you need to bet on stronger companies where the volatility is not going to impact the prices, in a very significant manner. So these two, three companies could be selective bets, from a slightly medium term horizon.
Okay.
Ladies and gentlemen, the markets are upon us. 52 points lower on the Nifty. This is a slight start on the back foot on weekly expiry day. These points really don't affect the overall sentiment. Let's hope that today is a day of reflection and pause, and then the markets restart their upward journey. Bank Nifty down 100 points for the beginning. IT is strong, 170 points higher on the Nifty IT index. Okay. The first look on the Nifty top 10 is weakness. I see all 10 stocks except for TCS posting initial losses. TCS is up 0.6%, 4164. What is Infosys doing? Infosys is down 9 rupees. Let's look at the top 3 heavyweights in the market. HDFC Bank down 2 rupees, 1753, nothing to be worried about. Reliance down 8 rupees, 1376, it's okay. ICICI Bank is down 8 rupees 75, 1293. What is SBI doing? In the green, 855. This is a stock to watch, ladies and gentlemen. We are expecting earnings this week. So, so far it's not bad at all, and this is consolidation. Hindustan Unilever marginally in the green, ITC marginally in the red, nothing to be worried about. Okay, now let's go to Tata Steel and find out how the earnings are being reacted to. 1 percentage points higher, 155.35. Okay, nothing to be worried about. There is a blowout happening on Apollo Hospitals, 5.7% higher, 73.60. Granules Syngene. So this is the pharma theme that is running well. Granules Syngene, strong quality. Mid caps are in the green from the pharma space. 1.3% higher on Granules. Syngene 1.2% higher. Laurus in the green. Let's look at the top gainers in the large cap pharma space, and that would be Sun Pharma in the green, 1830. Do we see Cipla somewhere? No. Dr. Reddy's again in the green, 1303, despite a drop in margin. That's how it is. And Apollo Hospitals is now in the top traded list in terms of volume as well. 190 crores have been traded. In the green, BSC, it's there every day, 4% higher. Zomato, again recouping strength. Swiggy's IPO is open, 2 percentage points higher. PPL Pharma, fresh record high. RVNL, 2 percentage points higher. And of course, you have stocks like TCS. This is interesting. TCS is the second most active traded counter. Normally that does not happen. So this is how markets have opened. Strength in Nifty IT, and it accelerates further. 230 points higher. TCS, HCL Tech, Persistent, Tech Mahindra, Wipro and Coforge are the top gainers. Avinash, share with us a quality IT pick which you think is still reasonably valued.
No, I think my guess is that I think Tata Technologies looks quite interesting, because considering the fact that it's beaten down and it offers a good opportunity for somebody who wants to take a longer term view. Although the broad consensus in the markets are that the numbers have not been very encouraging, I would say that at these levels there's very little to lose. And I think if one has a 2-year kind of perspective, then I think a decent amount of money shale can be made in this counter. I think they have a large, good marquee clientele base. Earnings numbers have not panned out as per expectation, but I think I would say that you need to give in a little more time to this company, considering the kind of sectors and the kind of business opportunities they're exploring. So I think over the next, say, 12, 18 months, if one were to hold on, I think one could recently expect a good upside. So this could be a contra bet, but yes, quality management, quality business, a very strong balance sheet, and good visibility of numbers, because order book still continues to be pretty good.
Okay. Got it. Let's look at the IT space yet again, 0.7% higher. It's now gathering further strength on top of over 4% move that was seen yesterday. TCS is 1.5% higher. Persistent, HCL Tech, Wipro, Tech Mahindra, Coforge, L&T Technology Services, all of them are gathering pace now. Let's get Sunilji to address the IT space as a whole. Contrary to what was being seen as a popular belief that IT space may actually feel the wrath of Trump's, strict policies on H1B, this has been a sharp outperformer as of yesterday, and it continues to move up in strength as well. Earnings have not been very, surprising on the positive side. Where do you think the IT stocks are really finding strength from right now, and where do you see investors' focus should be in the IT pack?
So I think 2-3 parts to this. So first is that I think the whole immigration related H1B was overdone, because H1B visa is only a part of the way IT companies do their work in the US, right? That's the onshore work. IT companies have the options to do nearshoring, which is go to other geographies and supply the US, or they can do offshoring, which is from India, neither of which comes under the H1B visa bracket. So they have a way out of that, even if that comes through in a little more severe way. That's one. Second is the point is from an IT investor's perspective, right? The US business is improving. Now, with Trump, there's a strong effect that the US business's profitability will improve, because he'll keep taxes low, he'll make pro-business related. So any US business improvement is a strong positive for IT from a business. So though current quarter earnings and guidance was not great, the future outlook looks good. The third aspect is Trump is already resulting in a strong dollar. A strong dollar is a weak rupee, and a weak rupee, a depreciating rupee, is favorable for the IT sector. So that again is a tailwind from that perspective. So I think fourth aspect is that if you look at from the IT perspective, there are a lot of American IT companies like IBM, Accenture, all of which are also outsourcing from India into there. So I think that they will recognize that ultimately this is a business which is critical, and the US does not have enough skilled workers to substitute the Indian IT skilled workers, which is very different from what the Mexican related immigration is leading to. So I think it's a very different kettle of fish. There was apprehension, so the IT sector had a little bit of a challenge, but now that it's got clear, I think the headway is. And finally, I would say that when passive funds make a return, right? And when active fund managers from US put money in, they seek a safety-oriented sector in a risky-oriented market. And IT fits the bill because those people, not only is IT more safe because it's not cyclical, but the buyers being in the US, they're able to get a sense of the order book. So if Infosys or Wipro or anybody says something, they can counter check it with their companies in the US and validate it. So their comfort zone improves dramatically. So whenever there's a pro-emerging market, pro-India kind of a FII flow, IT would get its share of buying. So that's a good support base for the IT sector going forward.
Let's dip into the broader markets at this point of time. We are at 923. It's holding for the initial part, and of course, a weaker rupee at a record low is one of the biggest benefits that Indian IT can hope for. They get almost 95% of their revenue from the dollar. Okay. Top gainers in terms of NSE 500. You have a trend on Apollo Hospital, 6.5% higher. 74.24. ITI, the government telecom gear maker, 7.9% higher, 250. Policy Bazaar, strength, 4.8% higher, 1741. You have JM Financials going strong at 3.5% higher. This was high beta, low ticket. You have JSW Energy in good shape. Zomato 2.5% higher. I'm wondering if we can get Avinash's view on Zomato. The Swiggy IPO is open at this point of time. Would you prefer Zomato or Swiggy, Avinash?
I think undoubtedly, Shell, see, Swiggy is now going to give a proper peer comparison to Zomato. But I think my choice would be Zomato. I think clearly from an operational perspective, Zomato has done a lot of activity to ensure that its operating profitability improves, cost cutting comes in. And I think Blinkit is also now very close to break even. So my sense is that yes, maybe on a slight correction, Zomato can be acquired for a 2 to 3 year kind of time frame, because these are businesses which are not easy to break even so easily, and only two players operate in the market. So there's a lot of runway, for them to cover, specifically not only in the metros, but even in tier 2, tier 3 cities where, the concept of food delivery is catching up very fast. So Zomato could be a good choice, provided you have a slightly medium term view. Maybe not in the short term, but in the longer term, I think this is a unique business where the growth levers are very strong.
Okay. Sunil ji, let's bring you in as well onto the same question. Do you think one should be really looking to spend their money on a company which is proving itself profitably, or should one really be looking at a new entrant which is lower in valuations?
Well, I think I agree with Avinash there. Bet on certainty. Zomato has proved something that very fintechs find it very hard is to move to profitability, right? And I think that's a big, big positive because running a business, see, most of these fintechs and the startups are good at raising money, but then they go and spend it also like mindlessly, and then they say, oh, we will come to profitability one day. Zomato has been a very pleasant change from that in the sense of the business focus on the cost and bringing it out, and a demonstrated model in a fast-growing industry. It's far better to bet on that kind of a model than on another new competitor who's far from profitability. If you look at those numbers, he's very, very deeply in the red. So if he is going to adopt some of the strategies of Zomato to come to profitability, then you're going to see a very different action. So I think at this point of time, I'm in agreement with what Avinash has laid out.
Okay. Got it. Avinash, parting words, anything else that strikes your attention in this market? Currently, we are 111 points lower in trade, slipped below 24,400 already. Anything that strikes your attention?
No, I think one can look at agrochemical companies, Sakshi. My sense is numbers have been pretty solid. If you look at the overall agrochemical basket, compared to last year, I think stocks like Sumitomo, Rallis, Sharda Cropchem. So I think this is an interesting space. Hopefully, this year's monsoon has been much better, and I think you could see very strong numbers. Although the second half is normally a slower period, but I think in terms of valuation comfort, I think agrochemical is one sector where I think one can take a reasonably small position. because valuations have come off, and that definitely provides a good entry point, as of now.
Okay, wonderful. Well, thank you so much, Avinash, for being with us
Let's
on
look
this
at
show
stocks.
to share with us all your thoughts right there. Always a pleasure to host you on Business Today Television. Yes, Shail, yours.
Let's look at stocks where you have earnings-based outperformance. Apollo Hospitals right there in front of you. Now 7,400, 6 percentage points higher, and that's driven by a very, very strong set of numbers. Net profit rose 63% on year to almost 400 crores. The year ago quarter it was 250 crores, and in the first quarter it was 316. So both sequential as well as year-on-year growth has been seen in net profit. Sales have appreciated 15% year-on-year to 5590 crores versus 4800 crores in the year ago quarter, and of course the June numbers were at 5000 crores. I'm very sure that this is a record high. Let me just look at the Apollo Hospital chart and then give you a view. Yes, it's a blowout and a fresh start that has come in post the earnings. What is the volume? 4,400 crore, my apologies, 444 crores shares have been traded on Apollo. Is that a volume buzzer? Let me just check. Yes, already 2.8 times the 5-day average has been traded on Apollo based on very, very strong earnings. Remember, second quarter earnings across the board have been terrible. So all numbers which are beyond expectations, beyond forecasts, are getting very, very strong positive response coming in from the market. Apollo at a record high 7,400. Sakshi.
Okay. Sunilji, let's quickly also get in a word from you. Where do you think have you identified pockets within the last 1.5 months of dips and correction consolidation playing out in various spaces? Where do you think investors have the best chance to start accumulating now to take the maximum benefit of when the uptrend clearly starts?
So corporate lenders, capital market related financial plays, and consumer discretionary. These are the three, because I see rural demand picking up, coming up. The K-shaped recovery is continuing to be strong, but it soon should see a V-shape happening. So I think that the markets have not really rewarded that. So there is still some, I would say, relative valuation potential there. And I would say that because government spending has been slow in the first half, its trickle-down effect has been felt on the consumption bit also. But I expect government spending to pick up, and consequentially the trickle-down income to lead to consumption pick up. As the budget approaches, the government will have to spend all the money. So I think that's my thing, that discretionary consumption, I think, will be a good pick at this stage. And as I said, corporate banking, because retail banking is where the stress or anything and everything has been, RBI has been putting a lot of efforts, and there is pricing pressure, net NIM pressure, because everybody is fighting out in the marketplace to lend housing loans and retail loans. But in the corporate space, right, as the government also starts spending and the capital goods sector gets its order book in place and go, that sector has, the valuations are already reflecting that potential order book for quite some time now. But I think the corporate banks, who are really going to finance this capital goods cycle, right, their numbers will start to come out in the year going forward. And I think buying them now would be a good chance for getting wealth creation done.
Well, ladies and gentlemen, we are now at 9:32, and we are waiting for one of the finest stock pickers and fund managers in the market, Mr. Dinshaw Inani, CEO of Helios Capital, will be with us shortly. I think he is. Kya baat hai? Dinshaw ji, warm welcome, and as always, this laugh is to die for. So much of positive energy that you bring to the screen despite pain all around. A very warm welcome to you. And how have you been? How were the festivities? Let's talk about life in general. Market to hota rahega.
Thank you. Thank you for having me on your show, and a very good morning to you, your team, and the viewers. So the festivities began on a very good note. I mean, Trump getting elected and the markets the way they were, but didn't last too long, I suppose. But we're hoping that things will go on as such after this small blip, as such. And as you ask me questions, I'll tell you why I feel so.
Wonderful to have you with us, Dinshaw sir, Sakshi this side. Tell us, are you really happy with Trump taking center stage? Is that really good for Indian equity markets? Or do you think yesterday was just like, okay, a one-off celebration and we are going to be back to, okay, earnings downgrades are happening, fundamentally nothing is moving right there. We've already been too much higher. So how are you really feeling after Trump's victory?
So basically, I think if you see whatever Trump has said before the actual becoming the president, and anyway, he's going to become a president only in Jan, not now, right? So if you listen to what he had said, everything was inflationary, right? Which is not healthy for not only for US, but also for the world, because if the economy is going through inflation, like what he said was put all around tariffs, which is inflationary, cut down on the taxes, which is going to fund through, obviously, the tariffs that he's going to impose on imports as such. And when you cut down on taxes, you're pumping up the consumption, which again is inflationary. And the last one was obviously the immigrants being thrown out of US, again inflationary, right? Because you're putting up the service inflation. So all these point towards inflation. But I'm sure, like all politicians, what he said will be very different from what he does once he comes into power as such. So we're hoping for that to pan out. The good part is that he's too much of an anti-Chinese guy to, really go towards China. So India may benefit on that basis. And the third part is obviously interest rate cuts in India, I think will take a backseat for a while, which should be positive for the banks which are there, the private sector banks specifically, which are there because they thrive on high interest rate scenarios. So I'll probably stop here and let's see what he does actually. So.
Sakshi, all the old boys network across equity markets are very happy with Mr. Trump returning. I'll tell you why. One, we will start enjoying Twitter again. Evenings will be wonderful. We will wait for his tweets. And he's a bigger investor than many of us put together. And it'll be fun, I'm telling you. That's why you see this wonderful, wonderful smile on Dinshaw's face getting deeper and deeper. Dinshaw, let's now look at your own performance with the Helios FlexiCap Fund. Year to date, ladies and gentlemen, hold your breath, 29%. This is despite the very sharp correction that we've seen in the past 22, 23, 27 trading sessions. So Dinshaw, what is behind this wonderful performance? And let me start with the first question. Zomato or Swiggy? Your third biggest pick in Helios FlexiCap Fund is Zomato. Are you defending your thesis or are you adding Swiggy as well?
So basically, I think the market is too big for both the players as such. And fortunately, I mean, if you look at what happens globally in the food delivery space, it's a two-player market. I mean, be it US, be it China, or any other market that you look at, right? So that is the good part. And second, the good part about India specifically is the potential is too huge for even two players to, spread it across between them. So I think we'll be taking bets on both. I mean, you've seen the anchor list of Swiggy. Our name is there in that list. So we're quite comfortable with both players, and I think both will do well. And frankly, I mean, the way they are going, and not only in the food delivery space, but also in quick commerce, I think they're taking away market shares from e-commerce, which nobody expected them to do, right? So that is where our belief lies, and I think we'll stick on to both the names and play it long.
Okay. Got it. So, Mr. Irani, do also tell us over the last 1 month odd or so, when this entire correction has played out in large caps as well as in the mid caps as well, have you added any pockets of value to your existing portfolio, or have you been on a cash raising trajectory, something which has been also seen as a big debate play out, that is this a time to build up on cash?
No, not really. We believe keeping cash is totally a waste of uh, money, rather, for the investors who trusted you with the money as such. So let me put it this way. Okay, let's look at the market valuation, right? And I will not talk about large, mid, and small. Let me break it up into, say, NSE 500 standalone market cap,
Yeah.
which is roughly around 5 trillion plus, right? Go beyond the NSE 500, probably the market cap, the remaining stocks, 6,000 odd stocks or whatever we have, is around $300 billion. Okay, so let's keep that aside. Let's just look at this huge chunk of $5 trillion, split it into four quadrants. What you will realize is that the two-thirds of this market, right, is quoting at P's of 19 or 19 and a half times forward earnings. Two-thirds, which is around roughly around 120 odd stocks. So obviously there's a lot of value lying in the large cap space and the mid cap space to an extent, right? There are pockets of mid cap which are totally frothy. Yeah. So
Okay.
when you ask me what we've been doing with this correction, we've been adding to the large and mid cap space to our portfolio. In fact, we were so convinced that we brought out a large and mid cap fund, which fortunately, I mean, came on at the right time, I suppose,
Yes,
and has
correct.
been doing fairly well as such. So we keeping our fingers crossed. So we are very comfortable in the large and mid cap space. There are some certain pockets of froth within the large cap space also. Uh, some of the paint companies have released their numbers, and you saw that that was like a total disaster, right? The commodity companies again look disastrous. I mean, the numbers that have come out as such. Then obviously the FMCG space is looking quite stretched within that particular space. So it's obvious that you'll have to avoid these kind of frothy valuations. You'll have to look at sectors which are showing growth. Go with those where the valuations are reasonable. And as I said, that there are quite a few pockets which are reasonable as such. So we've been adding to these kind of names per se.
In fact, if you look at the portfolio of Helios's flexi cap fund, it hugs the Nifty to a very large extent. All possible large cap Sakshi in the top 15 Nifty market capitalization are there. When you look at Dinshaw, the broader markets and this pain that is getting reflected by foreign institutional selling, could you please explain to our viewers the correlation between this rise in US 10-year yield despite cuts in interest rates by the US Fed? What is the reason why we have this continued strength in the 10-year yield, 3-year yield, 2-year yield, 1-year yield? All of them are going up despite rate cuts. What's the reason?
Before I talk about the yield, let me just clarify a bit on the hugging part of Nifty 50. We don't have large caps like a Reliance or a Hindustan Unilever or any auto company as such. So we are very different from probably the Nifty 50. We've been very choosy in that. Okay, coming to the interest rate scenario within the US, as I said, I think the whole play till now was a Trump trade. Even the India selling that happened was actually, according to us, a Trump trade. I mean, we never were convinced that money was moving out of India to, say, China, because nobody does that. I mean, the index balances itself, and that's why the ETFs don't actively sell a country to buy another country unless you go over to the country, right? So that was what our conclusion was. And October was a revelation for all, right? India saw a massive selling. By the way, China saw bigger selling than India in the
Yeah.
FIS space.
Yeah.
US saw massive inflow. Okay, so US actually saw inflow of some $145 billion or as such. And 40 of those $1 billion came from the Asia Pac region. So our belief was that it was a
Okay, I guess I guess there is
it's
some
going to
tech
be
appeal.
inflationary. Yeah, it's going to be inflationary.
Yeah.
So that's why I believe some of the smart investors in the US were betting against the Fed, which is normally never done, right? And that's why they were shorting the bonds, given that the yields are going to move up and stuff like that. So it was obvious that they were taking a smarter call there. So I think that is what is being played out in the US rather than anything else. My feel is that obviously some amount of smart money will come back to India because this is where the real growth lies. Obviously, the last couple of quarters have been very disappointing. So will be the case in September. I don't think the September quarter is going to be that exciting. But our belief is that given the way the festive season, the last probably last couple of weeks of the festive season have taken off in India, December looks to be a quarter which should see a turnaround, and that also is will be helped by the fact that the base of last December already has started coming down. So on a YOY basis, you'll start seeing numbers which are fairly decent looking from here on. So.
Okay, got that. Mr. Rani, how are you really looking at the IT sector specifically? This is the sector that has shown a lot of enthusiasm with Trump's victory. But is everything is all hunky-dory right here? Are there going to be further challenges? Earlier we were expecting that, once Trump comes to fore, there will be again stricter policies on H1B that could hurt the IT sector again. But this sector is probably looking at loosening purse strings of clients with lower taxes and probably businesses getting started from them. But how should one retail investor really look at the IT pocket after the yesterday's move and what has played out in the earnings so far?
So basically, IT suffered last time when Trump was around because he was very clear that you need to have indigenous people working, I mean, as in the locals working for IT within the US as such. Yeah. Two things out here. If you see the work base of, sorry, excuse me, even the IT players in the US today, the Indian IT players, 60 or 70% of their workforce is the local people, right? So that arbitrage is gone. Secondly, I think the good part is, as you rightly mentioned, is that with the cuts in taxes that he's talking about, the corporates and stuff like that, that should give a very clear picture to the corporates to further look at growth, and they'll go back into the discretionary space. And that's why our belief was that this is the space to be locked into. Even before we saw a Trump trade playing out, in fact, we became bullish on IT in July of this year itself because we saw the numbers of TCS. And by the way, according to us, TCS is a bellwether for the IT space in this country. And we saw them adding manpower. We realized that things are coming back to fore as such in IT. And obviously, when the Fed announced interest rate cuts, that was another move for us. I mean, we said, okay, this is where the things are working out. Didn't work out to that extent, but the fact is when Trump came back, he's talking about cuts in US and tax cuts in the US. So that seems to be the healthy part. So I think that is where our comfort came, and we've been totally overweight IT since then. And yeah, we continue to be. I don't see that. I think IT and banking will be the two sectors which will be the leaders going forward from here on. Normally, you see a turn. I mean, you see a whole revolution in terms of the new sectors which are leaders. I think these are the two sectors which will be leaders going forward. And I'm putting my throat on the line out there, neck on the line out here.
And if you look at the Helios FlexiCap fund, Dinshaw is sitting overweight in technology versus the category average. They have about 20% of their funds deployed in IT stocks such as TCS, Infosys, KPIT, HCL Technologies, and of course financials, 35% of the portfolio versus 26% of the category average. Dinshaw, there is this background noise in IT that artificial intelligence and a lot of other such efficiency improving tools will put pay to the body shopping that the Indian IT sector is famous for, which is essentially that you don't need so many code writers to do tasks which is now getting automated. How do you see this argument against the backdrop that you have raised your presence in Infosys, TCS to some extent in the fund?
So actually, we were also very confused initially. But if you look at our industry, I mean, when say machine learning came in, or autonomous came in, autonomy came in, and stuff like that, they were the first ones to get the ropes right, and they were the first ones to get off the block. Our feel is that AI will in fact build an efficiency, all the monotonous jobs which the IT guys were doing. So basically, I mean, there are a lot of monotony in terms of when you're programming and stuff like that. If AI takes over that, I don't see a problem here, because now your manpower will be looking at more efficient things where the per hour rates are much more higher than what they were doing in pure coding as such. Obviously, it will be limited to a certain players who have learned the tricks. Like for instance, I mean, some of the top IT names that you mentioned, they're already into their 13, 14 platforms on AI, which are functioning and helping out corporates in getting the efficiency right. So I believe it will be an add-on tool for IT, the way the earlier disruptions were supposed to be because in India, it's no more throwing bodies to the job as such. It's, I think, more of brain power that is working out, and that's why we're much more comfortable here in IT, given that even AI will be adding to it. That's what our feel is.
Okay. Mr. Rani, after the recent downturn in the markets, do you believe that a bottom is at least in place, or can we further test that 23,800 and go further below? Do we have any triggers to pull the markets from here? Can we slip back below? What is your entire sense right now?
So I don't know about the index bit, because, as I said, there are quite a few pockets within which are fairly overpriced, and the weightages, unfortunately, are very heavy in those pockets also. But our belief is that I think the best case that you may see, at least in the small cap space,
Yeah.
is that it's gonna be a time correction. I think that rally is done and dusted. Yeah. In terms of I think the large cap space, I believe there's still more to go. In fact, as I said, that the heavyweights have still not moved. I mean, look at the sectors like banking, or say IT, or even in that case, pharma. I think they're yet to move up as such. And frankly, I mean, I don't know how much weight they hold in the index, but I believe they have enough weight to move the needle out there. So as I said, leadership has changed, and that is where you will see the churn coming in. Auto space is something that is totally avoidable for us. We
Okay.
don't expect autos to do well going
Okay.
forward. So these are the kind of pockets you need to avoid, and the pockets that you need to get into. So leave it here.
Dinshaw, in the large and mid cap fund that has been recently launched by Helios, what are the hunting grounds? Are you also looking at spaces where massive corrections have happened, maybe PSU banks? Do railway stocks and defense counters sort of attract you at current levels? Some of these themes were found missing in the flexi cap scheme. Is this something that is attracting your analysts, your research team?
So definitely the PSU banks and railways are out for us. I don't see that uh, working out for us in a big way, even in the flexi cap. You haven't seen that in our sorry, you haven't seen that in our flexi cap, so you won't see that in a large and mid also. Defense, we were already there in that space. We did trim actually, but I think the correction was overdone. So whenever you see our portfolio coming out in the large and mid cap space, you'll see that
Yes.
some different names have come back into play for us there. Fortunately, unfortunately, you have to keep a cap of 65% on the large cap and 35% on the mid cap. Minimum 35% has to
Yes.
be there in the mid cap space. So you got to work accordingly. And as I said, defense names are large cap, so you can only top up to that much and not beyond. So it'll be a very interesting portfolio as and when it comes out. You'll see that.
Also get you to also talk about the themes within the banking space, where exactly are you finding more confidence? Are you looking at private sector banks right now, the large caps at those, or do you believe now is the time, after a little bit of correction, PSU banks will also come back in flavor? And could you also add how are NBFCs looking to you at this point?
So let me start with so basically BFSI, right? I mean, I'll kitchen sink the
Correct.
whole sector as such. So in the banking space, obviously private sector banks. As I said, that
Okay.
I don't see the RBI cutting interest rates in a hurry, given that the way the rupee reacted, and actually not only rupee, the whole world reacted to the way Trump came into power. Uh, all global currencies depreciated against vis-a-vis
Yeah.
the dollar. Uh, and frankly, I don't think that's what Trump wants. He's always been talking about a weaker dollar, but unfortunately, as I said, all his trades are inflationary, so that won't happen. He has to work towards it. Yeah. So that was one. So this sector remains a front for us. In the NBFC space, given that the raising of deposits for the banks itself is becoming a problem, we've been very selective in that space. We've not gone overboard as such, uh, fairly selective. Obviously, microfinance is something that is totally avoidable at this point in time.
Okay.
So we've not been there as such. And coming to insurance, again, we like both life as well as non-life. That is general insurance. Basically, given that GST is going to be tinkered around with, hopefully, so that space should do well. And in the services space, the financial services space, I talked about NBFCs, which is where we are selective, but I think there's a huge pocket which we consider as gatekeepers to wealth. I mean, you're talking about wealth managers, you're talking about brokers, distributors, and stuff like that. I think that is a very exciting space to play with. And obviously, there are a few platform companies in that space also, which are looking very exciting for us. So that's why I think I've covered mainly everything out here. So that way.
We are very keenly looking forward to the first portfolio of the Helios Large and Mid Cap Fund. Some of the interesting themes that you've mentioned, obviously, will be represented by those quality stocks which have either corrected or maybe see a lot of opportunity. Dincho, how do you react to this move that will now happen in November? The absence of weekly expiries. The theme that you mentioned, the wealth financialization space, has been one of the biggest beneficiaries of this rising volume that has come upon us over the last maybe 3 years or so. Don't you think these stocks, brokerages, and the likes will have a maybe corrective phase because volumes will now dip substantially?
Okay, thanks for highlighting that, because I mean, when I said brokerages, we were looking at diversified plays within the brokerages, not pure brokers. I agree with you totally. I think that is one area which will suffer wherever there was a pure brokerage which was working on the stock market basis. Obviously, the volumes will go away in the F&O space, and which is a very healthy thing to happen, because India was accounting for a huge amount of speculation globally. And in fact, if you look at the volumes within F&O, global volumes, India was accounting for roughly around 85% of global volumes. US was around 12 or 13%, and the rest was the world together. So it was obvious that it was very frothy at that point in time. So I think that will be the one which is to be avoided as such, which are pure brokers. Yeah, and coming to the markets per se, I don't think the markets will, because you just taken away the weekly expiries of various indices as such. You continued with the single stock futures, though we upped the ticket sizes per se, which will take away some kind of froth. But I don't see the volumes also suffering to that extent. So we are quite okay in that space as of now. I mean, the brokers that we have are the very diversified guys. They have got their wealth management units. They have mutual funds with them and stuff like that. So we've been playing that game rather than the pure broking game.
Right. Mr. Ani, just to get a sense, because you have been in close touch with your foreign friends, to help us understand how long is this sell-off going to continue, And, is it okay if it also continues? Do you think that retail investors, which have so far posed themselves as extremely strong, resilient ones, to continue to pump in money every day, similar or more amount, will have the strength to continue to do so even for the rest of the H2 as well of FY25?
So I wish my foreign friends were open enough to tell me what's happening. But let me tell you about what's happening with our fund as such. We see inflows, right? We have an offshore fund which invests in India. So of late we've seen inflows happening out there, which are fairly healthy inflows. That too, yeah. So not small money; it's fairly good money which is coming in. The interest rate levels are also moving up. I mean, the amount of meetings that we've been having the last couple of months are really off the charts as such. Yeah. So that is a healthy sign, right? That interest is coming back to India per se. On the retail front, in fact, the days of corrections, we see a huge amount of inflow coming into the funds as such. So it's obvious that the retail guys who are sitting on the fence, they normally wait for these kind of chances as such to come in. Even the HNI space, where we have offerings like PMS and AIF, we see inflows coming in on days when there's weakness in the market. So it's obvious that there's a lot of interest which is lying dormant, and they want to come back into that space as such. So I think on that front, the flows front, we don't have a problem at all. Fortunately, I think India is in a good space and will continue to be so.
Dinshaw, it's always a pleasure, but time is of the essence, and Sakshi and I have all of it, but you have to leave. Our final question to you is this. Are Indian markets primed for disappointment given the rally that we have seen over the last 3 years on indices alone? Many of them have doubled, given 100%, 200% returns. And here is a situation where we continue to pour in money into equities on expectations that returns will be similar. Would you want to sort of speak about how to manage these expectations within your PMS clients and also for mutual fund investors?
Actually, you sound very bearish. So let me just put things in perspective right now. So if you look at the last 3 years, the Nifty 50 has given a return of roughly around 12.5%, 13%, right? If you look at the last 7 years, or look at the last 10 years, or last, say, 20, 25 years, it's a 15, 16% kind of return that the Nifty 50 has given. So on the large cap space, our feel is that people have seen the rally in the small cap index and the large cap index, or mid cap index, and they've concluded that the markets are fairly heavy on valuations and stuff like that. Fortunately, the large cap is the one which dominates the market. As I said, 120 stocks account for 2/3 of the Nifty market cap. So you can imagine when these stocks start moving, and our feel is that when the foreign money comes in, when the FI money, FPI money starts coming in, this is the segment which will start moving, and this is the one which moves indices as such. So our feel is that we're in a very safe place today, provided you're in the right kind of gaps that you want to be in. So I'll leave it here. I think I'm not bearish at all.
Okay. Wonderful.
With that, Dinshaw, it's always a pleasure. Here's wishing you all the SIPs and all the new launches having fantastic success, just as Helios FlexiCap Fund has, and looking forward to meeting you in Mumbai soon.
Thank you. Always a pleasure to be on your show.
Thank you so much. All right, viewers, that was Mr. Dinshaw.
With that, ladies and gentlemen, we have a 250-point cut. We have a 250-point cut on the Nifty, and it's just 45 minutes of trade. This is again the US 10-year yield. This is again the dollar index, and this is again the 24,500 call writer that I was talking about on the Nifty. So the 21 EMA is providing resistance. Is this a sell-off that will take out all the gains that have come in yesterday? Probably, and then we'll head maybe lower. But Nifty 500 is down 162. The Nifty banking index, which started a fresh expiry, is down 500 points. The IT index is given up 350 points, and the advanced decline ratio is now firmly in place of bears. 1150 shares are in the red versus 1100 that are in the green, so almost 1:1. But all 19 indices are trading in the red, except for the media index, which really is completely irrelevant. So selling pressure returns on the Lal Street. Sakshi.
Absolutely, and now the focus will shift as far as the US Fed is concerned. Remember, the Fed is widely anticipated to announce a 25 bips rate cut today, and that will be seen as a reaction tomorrow. While the Fed chair Jerome Powell is likely to sidestep any definitive marks about Donald Trump's victory and how that could be impacting the policy decisions, the market will be closely watching for any signs on how Fed might respond to any inflationary impacts that Mr. Dinshaw Irani was also talking about on the new fiscal policies that will come into fore as well. 250 points down on the Nifty Bank down by 488 points at 51,830. We'll wrap it up at that, but do stay tuned. We'll be covering the markets with top market masters throughout the course of this day to help you understand which way is the market headed. Stay tuned with us.
We are here at the Palm Beach County Convention Center, exactly where the Republican Watch Party is taking place. Excited Republican supporters, you can see, have come in, and all of them watching big screens of what the results are really showing. And it seems like Trump is leading right now. So an enthused and ecstatic crowd out here, watching very keenly as to what's happening on the ground when it comes to election results. All of them very keenly watching. You can see right behind me, they've got their drinks, they've got their food, and they are excited about what's really happening. Sir, you're here.
Yes, I am.
Tell me, how excited are you about the election results?
I am incredibly nervous. I'm trying not to throw up. Waiting on the results to come out. Pennsylvania is going to be the one we got to watch.